If you like getting into emerging markets and stocks before they become popular, then today we have a real treat for you. Last week we attended the 14th Annual Australian Microcap Conference here in Melbourne. And today we will share with you some of our stocks that we liked. Now as traders, we know that if you want to be ahead of the game, you have to be in the right place and have the right knowledge. Today, you've come to the right place and we will share some of our knowledge. With decades of experience teaching and mentoring traders, our Wealth Within team are sought after by the likes of Money Magazine, Hot Copper, Bloomberg, CNBC and major Australian media outlets. We're also the brains behind Australia's leading accredited share trading education. I'm Dale Gillham, joined by Wealth Within Senior Analyst Filip Tortevski and Alexandra Lowen from the ALX Report. Welcome team, how are we?
Good, thank you, Dale.
It's nice to have you on the desk.
Thank you for having me.
I know we threw Janine out and put Alex in the desk, so well done.
She'll be back.
She'll be back. Well, Janine didn't go to the conference, so she can't comment, can she, Phil?
No, but it's nice. I mean, nice little change up on the show. I know, Alex, you always attend these conferences, so you've got a lot of interesting information to give us. But it was good. The scones were good again last year. That was nice. I didn't have a beer. That was a shame. But, yeah.
I always go for the scones, but I mean, Alex works with some of these companies, so she's got much more of a deeper insight into these companies and what they do. But anyway, let's get straight into it. Now, last week, we all had 2 big days at the conference. 24 companies all sharing why we should invest in them. Now, I've been to 13 out of 14 conferences, and I thought this year was the best, but I'd like to hear what your take on the conference is with Alex.
Oh, the conference again was just phenomenal to see all these companies and some that have presented before and over so many years too, and to see the growth. But this year what we all could see and highlight is that there were so many opportunities with R&D, a lot of movement, a lot of capital raising, everyone ready to go with a big boom into some new news.
Yeah, and I was only chatting with Phil about it the other day saying, you see these companies and there's different stages at the conference. So some are just sort of an idea, but they're not commercialised properly yet. And then other ones, you see them the next year, and then they mature into this company and go, yeah, they're going to go. I mean, that's what we saw this year, wasn't it?
Yeah, and a few real big standouts. Obviously, the R&D space was still quite big in the health tech. That I found that quite major. But, companies which we're going to get into that were moving into commercialisations, expanding in other areas of the market, I think they were showing real promise and earning. I mean, starting to show profits, which is what you want to see if you're an investor. That's going to take the company to the next level, potentially get that re-rating and give you some really good share price appreciation.
Yeah, I mean, I found this year's conference was, can I say, a little bit different. The energy was a bit different, and I don't know whether you felt that, but to me it was like, some years I go, ho-hum, some boring companies, some really exciting companies. But this year was like, the energy was different, the outlook was different, it was more exciting, and the potential for the future was more exciting. I mean, I don't know if you guys found that.
Absolutely, and to have more delegates there viewing it as well as online, it was just really wonderful.
I know, there was a lot of people, wasn't there? Yes. Cool. Well, anyway, let's get straight into the stocks that piqued our interest from this year's Microcap conference. So, Alex, who's first up?
First up is Intelligent Monitoring Group Limited, which has an ASX ticker code of IMB. Intelligent Monitoring Group is a leading provider of monitor security and IoT solutions, protecting over 180,000 businesses, homes and individuals across Australia and New Zealand through its wholesale monitoring arm. It boasts a network of 800 local security company partners and 4 advanced A-graded monitoring stations, ensuring reliability, 24/7 protection year-round.
Yeah, I was particularly interested in this one. I mean, as last year was the first time I came across this stock at the conference. I actually met the CEO, Dennison, and I was really, really impressed with what he did, but this year they just upped their game and I really enjoyed it. And what part of that made it interesting to me was that Intelligent Monitoring Group has 72% of its revenue coming from recurring services. Now, its customer base spans government, commercial, residential and personal emergency response sector. But I want to go to you on this one quickly, Phil, because now they have AI crime fighting abilities. It's almost like Superman there, aren't they?
Yeah, I mean, and I think what a better time, and I'm not saying this from a positive perspective, but you've seen crime rates in Victoria, especially in Australia, go through the roof. And so a company to provide this kind of service, and I found it fascinating. I mean, I thought, and little things, you think, okay, well, we do have a finite amount of police in the state. And to be able to direct that through the use of AI to really get to the serious problems out there and sift through the important stuff, it's huge. It's life-saving. So, and it's going to deter, hopefully, criminals faster and longer.
Well, it is. I mean, I know Dennison, he was presenting, and he's the MD CEO, whatever they call him, and he was saying, I think 6 or 7 crimes they've prevented before they started because their cameras picked up possible intruders, and they've called the police, got them there, picked them up before the crime happened.
Exactly.
And to me, prevention's great.
Absolutely, prevention is key, in the alert system, having them monitor it, and for people who aren't there and there.
Yeah, absolutely. Now let's go and have a look at the chart, Phil, and give a bit of a technical view.
All right.
Now we've got everybody excited.
Yeah, let's do it. Let's get to the chart. I mean, this one here, what's quite interesting, it's been around for a little while, and you can see a lot of participation in the stock early days. I zoom it in a bit closer here on the monthly chart, but it has died off, which is kind of what you expect with a, one of these microcap players. What's interesting right now is that we are seeing a bit of an uptick, and that to me is what is, I guess, sparking a bit of interest from buyers. With the way it's unfolding through here, I would like to see it get above that October high and continue this momentum, because right now that's what it's about. It's in a space that is really interesting, a lot of demand. Buyers are starting to get involved in the stock. I mean, you look at the picture from 2019, 2 different stories. The stock's in free fall. From 2022, we're starting to rise up. So I think watch this space, watch the stock closely. But for me, it's really got to keep going on this trajectory. Take out October high, show some momentum and show some growth in the way the nature of price is unfolding. It's quite short and congested right now, meaning that, the activity isn't as strong as it was in the past, but we start to get expansion on these ranges on the monthly scale. I think that'll lend to a lot more participation in the stock, and that's when investors and traders will see better benefit of getting involved when money's pouring in.
Well, I think the story, part of the reason why I thought their story is better this year is because up till now they've been much more on an acquisition basis, haven't they, Alex?
Absolutely.
Buying all these security monitoring companies right around Australia. So they've done that. That costs a lot of money.
Yes.
Now they're ready to utilise that, and they've also just taken on the big boys, so to speak, in the physical bodies on the ground. Now they can quote for big jobs, which they were talking about. So I think it's exciting. Any last words, Alex?
They actually do have some exciting news coming up, so do watch this space. That's ticker code IMB.
Oh, there you go. So Alex is not telling us right now, but anyway, let's move on to the next stock. Alex, so who's this?
So Global Health is next with ticker code of GLH. It is a portfolio of composable software and SaaS platforms to connect clinicians and consumers. Since 1993, healthcare organisations have been using their applications across private hospitals, general practice, specialists, and allied health, community health, and mental health sectors, as well as for managing non-communicable diseases. They have a national presence across Australia, and this reflects the strength and breadth of their solutions.
Now, since I saw this company last year, they've completed their upgrading of all their technology, and their focus is now shifting to revenue development, a bit like Intelligent Monitoring Group. Now in Australia, Global Health has a partner agreement with Best Practice for the integration of Hot Health and ReferralNet. And to give you an idea, Best Practice is deployed in more than 6,000 practices nationwide. So that's nothing to be sneezed at, is it? So they are doing well. I mean, they're very, very solid company, been around since 1993. So they're not going anywhere, and I do like what they're doing.
And they've got a lot of R&D going on. So this is definitely a stock to watch, because next year they've got a lot to announce. And their partnerships are really key at the moment, what they're working on.
Yeah, I remember, I know we were at, both Alex and I were at a dinner probably 6 months ago, and Matthew, who is the managing director, I believe is his title, was sitting across from me, I believe. No, you were sitting across from me. Matthew was sitting next to you, I think, and we were having a chat. And what the stuff he was talking about, we can't tell you guys, because it was an exciting story, and that's why we picked them for today. So what's the most exciting part about this Global Health Group for you?
Well, because the global, what the reach is because of the R&D they're doing and the solutions they're providing for consumers, but also for the clinicians worldwide.
I like it because it's just recurring revenue, just like intelligent monitoring, because they're subscribing to this software. They're doing a lot to help health practitioners, but not just the businesses themselves, but for the patients themselves. And that's all good. And especially if you've got ongoing health issues, like ones that just need monitoring all of the time, and their software works in all of that area. But I think we now need to go to the chart, Phil.
Well, I think that's the part I'm liking the most. Let's go to the chart and have a look. Now, I've got the monthly chart here, and, you know, surprisingly, unlike a lot of microcap stocks, this stock's got movement. I mean, it's had movement since 2012, and I'll just bring it up. In terms of the nature of some of these rises, you know, if we get the tool up through here, we've had in 2020 a run up of about 400%, and that was following a previous run in 2012 around that 500% mark. So unlike that, you know, slow drabble at the bottom of the market, this has got activity, which is quite exciting as a trader. If I didn't know the stock code, I'd be looking at something like this. And even more exciting is the fact that we are now trading at a level which has basically been the springboard for most major runs, around that 10, 12 cents. So I think the setup, where price is right now, it's a bit of that, you know, deep value type proposition. You do need to be strong with the way you're identifying reversals. Again, things we do teach here at Wealth Within Dale. A lot of traders, they come to us and they see these charts and they think, oh, I just need to buy straight away because it's low, and it's gone up 500% in the past. But the key is getting the confirmation right with these reversals. And if we just go back to that chart really quickly, I think a break above 20 cents answers a lot of questions medium to long term. So look, it's pretty exciting. Seeing buys over the last couple of months, I think watch this space, and 20 cents is a good gauge on when it should extend.
Well, I mean, given what they've done the last year in upgrading all their software, to me, this is one of those stocks is X multiples.
Yeah.
You know, once it takes off, you've seen 400-500% in a short period of time. That's what makes this stock exciting.
And multiple times.
Yeah, but you've got to know, like I was saying earlier at the start, I was saying you need to be in the right place, plus you need the education, and people don't have that. So if you're looking for the education, this is my second book, Accelerate Your Wealth. So if you are wanting to be a trader, you want to understand a little bit more about how to trade these sorts of stocks with rules and tools, you'd get this one, our book. So just go to our website, wealthwithin.com.au, and you can order your copy. My first book, which is still free, just got to pay the shipping. I think it's pretty much almost sold out. So if you do want to get a copy, you need to get in quick. There's a link below in the description to get this for free. We will be ordering some more, so if you do want that one. But it's a little bit more for investors. But for traders, get my second book because it'll help you understand that. Now, Alex, I'm going back to you because we need to move on to our next stock.
The next one really caused quite a bit of discussion at the conference. And like a few we are talking about today, it has been at several past Microcap conferences. It is the Hazer Group, the ASX ticker code HZR. Hazer is an Australian technology company driving global decarbonisation efforts with the commercialisation of the Hazer process, a world-leading low-emission methane pyrolysis technology that enables a production of low-cost hydrogen and high-quality graphite. The Hazer process has a strong competitive advantage by using iron ore as a process catalyst, significantly lowering energy intensity and cost. Hazer's technology is a disruptive technology and is available today to replace existing carbon-intensive hydrogen production processes.
Well, that was a mouthful, wasn't it?
Yes.
Yeah. Anyway, what's exciting to me is that Hazer's addressable market is estimated, and I hope you're sitting down for this one, is worth upwards of US $12 trillion in 2050, up from a cumulative US $90 billion in 2030. Now, there's 200 to 600 megatons of hydrogen is required to fill the gap needed to complete the transition to 100% renewable energy. Now, Hazer is poised to capitalise on the rapidly growing demand for renewable, sustainable energy globally. And I know as soon as we saw these guys present, we talked about it. And like you, I saw them last year and I was excited, but I went, wow. What's your take, Phil?
Yeah, look, unfortunately, I was out of the room on this one, but
you missed it.
I did miss it, but when we get to the chart, it's going to be really exciting because to me, out of all the ones we've seen so far, this one is showing the most promise.
To me, they're using very low energy to create graphite, but high-grade graphite, and there's a huge demand for that. But the process that they're doing, they're actually making companies like they're in steel production, in what was some of the other productions for other metals as well, that take a lot of energy. They're just making them carbon neutral really quickly, simply and cheaply. That's even better. So, and it's really, really good. But there's another piece we need to talk about, isn't there?
Another exciting piece of news in the agreement with the world's largest engineering company, KBR. This is an exclusive global licensing and engineering rights for the Hazer process in the ammonia and methane markets. KBR's extensive expertise and global presence will be instrumental in expanding the technology's reach and securing high-value licensing opportunities in the major markets like North America, Asia, Europe, and the Middle East.
Now, this is not something down the track. This is happening right now.
Right now.
So this is where, like I say, this is the opportunity. If you have to be in the right place with the right knowledge, and to me, this is where this company's right at the moment.
Yeah.
So, and I know you're excited about the chart, aren't you?
There's nothing better than when you have a really good story, you have things on the horizon, and then you see price action begin to line up. That is really, when you can quantify what should be happening, and we're seeing a bit of that now with Hazer. Obviously, again, another stock back at those 27-cent levels have been so important for it. It recently did that, gave us a real typical base out type move, but we've seen buys come in, and that's the crucial part right now. Buys have come in, they're holding, and I think, there were for early buys potential opportunities to already be in this play, but I mean, we're seeing volume pick up as well. If I zoom that out, volume's really picking up in August, late August, much more than it had been all the way, before 2022. So, yeah, look, when you start to see these kinds of patterns, Dale, I mean, you get excited because it's one of those potential opportunities that could give real nice expansion where it's come from. And so I'd be watching, just for a bit of guidance, I'd be watching the 79, 80 cent level. I think that's where the next level, where sellers might get involved. But hey, as long as we hold, above these highs in January 25, it looks like we've broken out, and that's promising.
I love seeing Australian companies where these guys are placed. Like I said, they're in that point where now it's about to take off. Now, Phil, trading microcaps really is different from trading larger, more liquid stocks. Now, both of us have mentored many traders in the past decades. Now, I know we've taught thousands to supplementary replace their incomes as well. Now, before we go to the next stock, I really wanted to get your thoughts on what the most important tips you have for anyone wanting to get in and start trading these areas, because it's not a low risk area, not like blue chips.
No, it's high risk. And then the reason it's high risk is, for one, you're dealing with areas of the market that aren't that liquid. And because they're not that liquid, the price action is quite erratic at times. I think the best bit of advice I can give, because a lot of people go to this market wanting that, one in a lifetime opportunity.
Well, they're smoking, or they're taking the, and hoping they see this story and they go, oh, I'll jump into this.
Yeah.
And not really look at the wider picture.
Yeah, and that's the thing, don't fall in love with the story. It's great that the story exists, but there are so many more hurdles that the company needs to get through at this level to become a BHP or get that real price appreciation. So I'd say don't fall in love with the story. One, make sure you're following price, because you don't have to be the first person in the market. Yes. In fact, the smartest way is to follow once the real money gets in. And third, I would say have a good look at who's behind the business. Because a lot of these companies, great idea, I've seen companies with great products, great ideas fail because the people behind it couldn't take it to the next level. So it's just as important who is involved in the business to send it where it needs to go.
And that's why the Microcap conference is so fantastic, because traders can actually meet the directors, meet the people behind the scenes, face to face, eyeball them, go with the
Well,
vibes.
I did that, and I know you stole a few of them away. I went straight up to a few of them, Dennison from my Intelligent Monitoring Group. The other one we're going to be talking about is the Rocket DNA.
Yes.
I went up to him and had a chat with him, and I know you know Glenn from Hazer Group. So to me, that's part of it, isn't it? You can get feel closer to the market. But Alex, we need to get into the next stock. So what are we talking about now?
I mentioned the last stock caused quite a bit of chat at the conference, and so did this one for a different reason. The company is called Tryptamine Therapeutics, with ASX ticker code of TYP. Tryptamine is a clinical stage biopharmaceutical company pioneering precision psychedelic therapeutics for neuropsychiatric disorders. Since the ASX listing in May 2024, just last year, the company has rapidly advanced its proprietary psilocin-based treatment platform, targeting conditions with significant unmet medical needs.
Now, what I really liked about this company is that Tryptamine's competitive edge lies in its ability to deliver psychedelic therapy with precision, scalability and biomarker guidance. Big words, I know. Now, this solves the core limitations of oral psilocybin. Now, basically, the delivery method enables rapid onset, short duration and real-time titration, making it both clinically manageable and commercially viable. Now, what's really exciting with this stock is it's in its early phases. And I know you're really excited about one part of this stock as well, Phil. I mean, a lot of big words there, but I know, we sort of looked at each other when the gentleman came on stage to present and we went, we're talking about magic mushrooms here.
Well, kind of, yeah.
Kind of, aren't we?
But I mean, the exciting part with this one was, you're right, in the way it's all about how to deliver and administer this treatment. Because the facts of the matter are, it is helping people. It's helping people in areas that are growing in terms of anxiety, depression, PTSD. And, to be able to administer something and have a patent on getting that dose to everybody and it be effective. And I'm no expert on mushrooms, but, to get it that way is very, very exciting. And even more, there was a company, he was measuring competitors that had recently had a similar process in place, but a weaker type administration process. And that company got taken over for
1 point something billion or something like that.
Yeah.
And this is another story where if you look at the board and the people behind the company, I mean, there's a name there that is really big. Part of one of the biggest pharmaceutical companies in the world, Johnson & Johnson, the son is working inside Tryptamine. So this is one of those cases where you look at who's behind the company and who's driving it, and you start to get, okay, well, this has promise.
And the son being in the company, plus also the research and what they've had with success to date.
Yeah, well, on the clinical trials, they've had huge success, and it's safer than the traditional way they've been doing these whatever you call them, psychedelic treatments, because you don't have to have all the doctors and nurses around in case something happens, where this is really safe, very effective, works really, really quickly. And I think, I can't remember what the rate was for eating disorders and that, but was it something like 80% drop in that?
Huge.
And after 1 or 2 sessions only.
Yeah.
This is not after 50 or 60 sessions.
Yeah. So how about we go and have a look at the chart and see what the chart tells us?
Yes. All right. Let's get to the chart of Tryptamine. Now, again, it's doing what it should be doing as a microcap player, obviously, especially still in that R&D stage, getting product to, pass legislation and get active within the market. But even in Australia, the Australian version of the FDA has been approving psychedelics for treatment, for therapy. So that's a big step forward, something that should be mentioned. So this company is in the right space. What I find quite exciting more than anything is have a look at the uptick in volume.
It's huge, isn't it?
Participation now is more than ever. And that is something that needs to be mentioned and focused on. We've had a big uptick in buyers leaving that gap through there, and we haven't managed to fill it. So I think this is quite promising. It's very early in the piece, and do your due diligence in terms of liquidity and whether you can get in and out on the stock comfortably. But I think, this pattern lining up is quite interesting. If it can hold and break above that 4.5 cent level, it should lend itself to another run up to test this high in November. And if it breaks that, we might be well on the way to a short-term run up.
Yeah.
And seeing what happened with the conference, that rise.
Yeah, I mean, look, it's always nice because these conferences, they also go out to the public. The ASX sends it out as an investor update, and the rest of Australia finds out.
Well, they have to announce to the market and do all their reporting, but the thing is like, unlike, Intelligent Monitoring Group or Hazer Group, which we think are much more down the track in terms of their maturity of a company, and Global Health is another one. It's more at the start, but it doesn't mean we shouldn't be looking at it. And I think that's the exciting part about this stock, isn't it?
Absolutely.
Well, often you do, right? Because if you're waiting for FDA approval, or if you're waiting for all the great news to come,
it's too late.
More likely than not, the share price has already gone up.
Yeah, so have a good look at this one. Anyway, Alex, who's next?
This is another stock we have seen a few times at the Microcap conference, and the story just gets better and better. It's called Race Oncology Limited. Its ASX ticker code is RAC. Race is a clinical stage biopharmaceutical company developing a next generation formulation of the anti-cancer drug EE bisantrene, RCDS1. Anthracyclines, currently the most widely used class of chemotherapeutics, are highly effective, but can cause permanent damage to the cardiovascular system. RC220 delivers a dual benefit of tumour-killing efficacy and cardioprotection, addressing the major limitation of existing anthracyclines. Is that right?
You said that perfectly.
Anthracycline.
I know, I get stuff with it all the time, all these big words. But to me, the interesting point with Race was that unlike many oncology assets, because we're talking about cancer here, they only have approximately a 3% probability of success. Now, RC220 benefits from a significantly higher estimated success rate of approximately 80%. So we're talking about it's not damaging the body anywhere near as much as what other drugs did. And what their technology is using in other pharmaceutical products. So they're selling their technology or their license for this technology for cancer drugs to help them better, make them better absorb, better effectiveness, and less damage to the cardiovascular and other systems. I think I got it correct, didn't I?
You did.
Oh, cool. Because I know. I saw them present last year and a couple of years ago as well, and I thought, well, that's interesting. And every year I go, that's interesting. This year I went, that's exciting.
Very exciting.
Because that's huge, this sort of area. So, any comments for you before I throw to Phil?
Oh, it is just, I just think it's fascinating to see what they've been able to develop and the results to date already.
And it's Australian.
And the Australian. Exactly.
And that's what I really love about it.
Story.
All right, so let's go to the charts and see what they tell us.
Yeah, well, the market's definitely caught onto it. It's not a new story. When you look at the share price, it's gone from $1 up to $5 recently. It's had a huge run, massive run. And this is the point of what we spoke about before with TYP. If you're not watching the charts, oftentimes these opportunities are going to come just before.
Well, Starpharm are one of the other ones. I think they presented before Race Oncology and their share price was up 200-300%, wasn't it?
Yeah.
In the month before the conference. So, yeah.
Yeah, it's great. I mean, if we look at the charts now and does that lend itself to a buying opportunity today? Well, it all depends on what your outlook is for this stock. Are you looking to hold this long term? Or are you more of trying to get in and out of the market with the most opportune time? And to that point, I think there's probably going to be a better opportune time coming to get that right entry. And we always speak about this, Dale. You know, it's great to have a story, but when you can time it with the right entry, the optimal risk reward, you're only going to supersize what you can get. And we see it with traders that come to us all the time.
Yes.
It changes their whole trading perspective from the point of view. It's like, okay, I used to invest, I never had a stop loss in place, or I never knew that I could supersize that return by putting some structure around the trade. And this is one of those examples where the better opportunity might be coming. We're coming off a bit of a pullback now. Volume's huge, so there's a lot of involvement, but I would wait for a better risk reward setup. And I'm not taking away from the fact that, hey, it's broken out to new highs. So that's very, very beneficial in bull territory, but hey, we know when things go up vertically, they often have the chance to come back.
Well, that's true. So this is giving you a chance to take a good look at it, look at what's behind this company, the news, the story that we talk about so much, and decide whether that's something that you want for the medium to longer term on this. Because some of these, I think, are long-term plays, you know, because they're very, very good companies. But anyway, for those of you who want more on this space and the companies that presented, we will soon have a link to watch all of the presentations. Now, if you want to know when that happens, send an email to info@wealthwithin.com.au and we'll give you the details. Now, the videos will not be uploaded here on YouTube, and the conference organisers will be charging a fee to watch them, as the content is seriously quite valuable. Now, I think I can speak for all of us here that they will be well worth the fee to watch, as just one stock will make you many multiples of the investment to watch the recordings. Now, for example, Race Oncology, who we just looked at, rose over 200% before the conference, and we still like it. Now, with the stocks we've spoken about today, we could only scratch the surface of what they presented, and so it is worth delving deeper into them. That is our take on some of the stocks we found interesting from this year's Microcap conference, and I really want to thank my co-presenters for all their comments. So thank you, Alex.
Thank you. Thank you for having me, Dale.
Our pleasure. And Phil for his technical expertise.
Thank you. It was good.
So hopefully you picked up that. Anyway, remember we record our analysis on stocks each and every Monday and Tuesday. So if you do want more from us, check back with us on Monday. And thank you all for watching.